Hi, everybody. Welcome to ReFrame Association's October 2018 webinar on best practices in accounting for home repair nonprofits. I'm really excited to have three panelists join us today, Ed, Jake, and Susan, and I'll let them introduce themselves in a minute here. We're expecting about maybe 7 or 8 more people to join us here. But let's start with some introductions of those who are already on, and I'm actually going to ask our panelists to go last to make sure that everybody who joins gets to hear their introductions. But I'll start. I'm Becca Davis. I'm the Executive Director of ReFrame Association, and I'm in Jonesboro, Tennessee, and just excited to have you all join me for this hour. And I'm going to be taking notes as well as the rest of the attendees because I keep the books for ReFrame and accounting is not my background, so I'm sure I have a lot to learn. Let's see here. Nicole, do you mind introducing yourself briefly?
Sure. Hello, everyone. My name is Nicole Beasley, and I work for the Tuskegee Wesley Foundation, and I'm their bookkeeper, and I've been doing that for a good amount of time. But always willing and needing to learn more regarding bookkeeping and accounting and different things of that nature, because keeping their books, I need to know that. So looking forward to the information.
Great, thank you. Let's see. Leslie, I see you there. Hi.
Hi.
Do you want to introduce yourself briefly?
Sure. I'm Leslie Shaddis. We are starting a nonprofit here that we're just in the beginnings of, Arizona Service Project, obviously modeled after ASP, and just anxious to hear what you guys have to say.
Great, thanks for being with us. Denise, do you mind introducing yourself? Oh, it looks like you might be muted somehow. Let's see. I can't hear you. On the lower left corner of the screen, there might be an option to turn on your sound. Still can't hear you.
Okay, I'm
Yep.
Okay, there we go.
Gotcha.
Okay. I'm Denise Jordan. I am the staff accountant at GoodWorks Inc., a home repair ministry in Coatesville, Pennsylvania. We recently have joined ReFrame, and I've been there 17 years and just looking to, always improve what we do.
Great. Thanks for joining us for the webinar. Let's see, Susan Davis. I'm not sure if she has a microphone hooked up. Let's see, Susan, I think you can see and hear us. If you don't mind maybe typing in the chat box a brief hello, and I can read it off to everybody, that would be good. We can't seem to hear you. And I'll move on then to our panel. Ed, why don't you go first?
Good afternoon. My name is Ed Simmons, and I'm the Executive Director at Mountaintop, which is located in Middle Tennessee. I'll tell you a little bit more about my background when I start my part of the session.
Okay, great. Jake?
Hi there. I'm Jake Bailey, and I'm the business manager at Sierra Service Project, and I've been here for almost 6 years now, doing the accounting for our organization, and I also helped Becca set up the ReFrame books in QuickBooks, and excited to be here.
Great, thanks, Jake. And Susan?
Hi, I'm Susan Miller. I am the Senior Director of Accounting at Appalachia Service Project in Johnson City, Tennessee. I've been here about 5.5 years, and we just celebrated our 50th summer of service in Central Appalachia.
Great, thanks. And Susan Davis wrote in, she's the Resource Development Specialist at Milford Housing Development Corporation in Delaware. Well, we might have some other folks joining us. We had about 7 other people who registered who aren't on yet, so hopefully some of them will join. If not, we are recording this webinar, and I'll share this with them afterwards. Perhaps something came up at the last minute. But thank you all for being here, and I'm going to turn things over to Ed and let him kick this off. I'm going to mute anybody else who's not already muted, just to minimize background noise.
Great. Good afternoon, everyone. It's a real pleasure to be able to share with you this afternoon as we talk about accounting within our different nonprofits. Give you a little background on myself. I've been doing nonprofit accounting in some form with churches or where I am now since 1985. I started off as a volunteer treasurer in a church while I was working for a large natural gas company, and I felt the call to ministry while doing that job. And my background is actually in accounting. I got my degree in accounting and got my master's in business. But as I was telling the other presenters before we started, accounting has never been my most favorite thing to do in the world, but I've been doing it my whole career. So with that, I've seen large organizations and small. I mean, the smallest was a startup church that I was involved with. When I went into the business, if you want to call it that, being a volunteer treasurer, to a large church in Houston with over 15,000 members. It was from there that I actually ended up moving here to Mountaintop to become the executive director. I've been a church business administrator and am certified in that. So, like I said, I've seen nonprofit accounting from all different perspectives and all different sizes. And the one thing I understand clearly is that it's important that we keep good and accurate records of what we do, because even though we all come from a different perspective, some from a faith perspective, nonprofit doesn't mean we don't pay attention and that we can just kind of do accounting by the seat of our pants. We have to be intentional because we're called, regardless of what our organizations are, to be good stewards of the resources that we're given. So given that, it's really important that we have certain things in place to be able to be good at what we do and good at tracking the monies that come in and the monies that go out, and to make sure that we do that in a way that brings integrity to our individual organizations. Mountaintop is probably in the middle of the road for many of the organizations. We're a little over $1 million. This is our 44th year of operation. We're in Middle Tennessee, right between Nashville and Chattanooga, and have been doing major and minor home repair that whole time. We are more of a residence camp model. In other words, people come from all over the country, stay at our camps, and go out and do the work that we ask them to do. So, but we're also small in a staff perspective. We only have 9 full-time staff, which means that we have to spread our administrative functions out carefully among those 9 staff. Only 2 or 3 are actually involved in the financial side. So it makes that difficult. When I talk a few minutes about internal controls, it makes it difficult to have good, strong internal controls when you have a smaller staff. Doesn't mean it's not important. It becomes actually more important the smaller your organization is. So, that just gives you an idea of maybe a little bit of how we would fit in and to maybe where you are, right? Some of you may only be one-people shops, and it's hard to have a lot of controls in place when you can't separate duties. But it doesn't mean it's not important. It is difficult in small organizations to have good controls, but it again, I'm going to say it's very, very important. You need to, wherever you can, be able to separate your responsibilities. You don't want necessarily the person, Becca, you're it. So there's a way we handle your internal controls through oversight, but you don't want the person who is depositing your money to be also the person that's writing your checks, who's also reconciling your accounts, that kind of thing. In our organization, we get people to do deposits separately from those that actually submit invoices for payment. In our case, when we write checks, there's always an outside of the organization person signing checks over, in our case, over $500. So we have a board member that lives close by, and that's how we are able to maintain some degree of control over what goes out. All of our checks are co-signed. All of our checks over 500 are co-signed by a board member who is a part of our trustees. The person who does all of the invoicing, for example, for participants that come to our programs and all that, they don't get the mail. So, there's no possibility that they can send an invoice to somebody and not record it and then take the money and do something with it. We have somebody else that brings in, goes to the post office, gets the mail, opens all the envelopes, and records the checks and prepares them for deposit. The person that does the invoicing gets copies of them so that they can see, okay, this person's paid, this church is paid, or whatever, as a way to make sure that they're keeping track of their side of it. But they don't. The money doesn't cross hands. They don't actually see the check in hand, the actual copy of it. And that's how we maintain that kind of control. Same kind of thing with the people that process our invoices for payment are not the same people that actually write the check, or the same person. Well, we're a small organization because I've got the accounting background. I do a lot of our accounting for us as the executive director, but I can't do it all because then there wouldn't be this separation. So while I might process the bills for payment, somebody else writes the checks. And again, like I said, somebody else signs the checks. I am the one in our organization that does the bank reconciliations, but those bank reconciliations are sent to the chairman of our finance committee so that they can review them for independent oversight. And that's how we manage that control. At one point, we had somebody in our organization do that, but we really don't have anybody with that skill set. So that's why we pulled in our finance committee. Anybody that comes in to look at your organization is going to look to make sure that there are checks and balances, that you can't have any one person carry something through from beginning to end, whether that's payroll processing, hiring new people, and writing their checks, or to handling money. Now, I know a lot of us have summer staff that are involved, and we delegate a lot of responsibility out to them during the summer. The way we manage how their exposure is we have created a separate debit card account, and we issue each of them debit cards out of that same account that we then reconcile on a weekly basis based on the receipts that they turn in. We limit the amount of money in that account so that if somebody decides they're not going to be honest with us, our exposure is minimal. So it's not like they're going to have access to our big account. They're going to have access to a smaller account with a limited amount of money. So that's how we manage distributing responsibility for them to be able to buy supplies that they need, or gas for their vehicles, or whatever. And then at the end of each camp week, there are certain reports that they have to turn back in that we then reconcile against that debit card account so that we can see how the money was spent. And we've been doing that for 13 years and have yet to have anything out of the ordinary happen or have any theft or fraud as a result of that. So I felt like that was a good system to share with you all. People expect you to have good controls because to them it goes to the integrity of the root of what you're doing. If you don't have good controls, they're going to think that there's the possibility, even though we're all trustworthy. Everybody has good hearts. Well, I listened to a webinar recently through the church network, and the amount of fraud in churches is astronomical. So you want your controls take away temptation, and people are human, people make mistakes. So by having good controls within your systems, then you take away that temptation, take away the possibility that somebody could do something that could leave you in a bad situation and cause you harm. Fraud within your organization will hurt you, especially if it gets out public that you've had that, because then your donors start questioning, are they taking care of the money that they have? Before I go into the Board Oversight and Finance Committee, does anybody have any questions as it relates to internal controls? Okay, I'll just press on. Like I mentioned, one of the things that's important for us is to have a finance committee. One of the things I have found through the years is people want to know about how you're doing financially, but not a lot of people want to really get into your numbers. What I found with our board is that, half the board would yawn anytime we gave a financial report. Some of them would find other things to do. And so they really weren't applying good oversight to that aspect of the ministry. So we rely on our finance committee. We have a separate committee that is made up of people who like numbers, a banker, a lawyer, business managers, and that kind of thing. People who really like to get into the nitty-gritty and the numbers. And that's where the detailed oversight takes place. At our board meeting, we will give reports on a high level of how we're doing as an organization. Are there areas that we need to be concerned about financially? But we don't get into the detail of, okay, why is our utilities bills up 30% over the previous year? We save that for our finance committee. Our board only meets once a quarter formally, but our finance committee meets every month. And they spend a lot of time going into the nuts and bolts. And then when we do go to the whole board, you don't have that in as much of the, okay, I'm bored with this, let's talk about something important. And you're then able to focus on the major issues. Our finance committee also acts as our audit committee, and I'll talk about audits here in just a second. But I think it's really important that you have somebody outside of your organization that provides some oversight as it relates to finances. Like in the ReFrame board, we have a subgroup of the whole board that looks at and provides some oversight on our finances as a board, so that, because Becca being a one-person shop, it's important that we provide her the support and direction that she needs in order to manage that aspect of the budget. So I think I would guess that we all have those kinds of organizations or those committees. If not, I would strongly encourage you to form something like that. Again, your board is responsible for oversight, and you don't want to delegate that away from them, but you also want to make sure that they're able to focus on the important issues, not necessarily why are utilities up 30%. It's also important that your finance committee, like I said, have people with an aptitude and a desire, because it's like any other discipline. Accounting is a discipline that requires a certain skill set, and if that skill set isn't present, sometimes it's hard to understand all the components that might be in a financial report. And so when you go out and I know some organizations, they may have a finance committee where it's made up of members that are not necessarily board members too, and I think that's okay. Obviously, somebody there needs to be representation on that finance committee that is also board members. But you want to make sure you get the right skill sets so that they can help with the difficult things that happen on occasion in the area of finances. And like I said, I've had this same experience not only with the nonprofit I'm involved with now, but also when I was working in the church. The finance committee was a key player in the management of of those two organizations. The third thing I was going to spend some time with was audits, and it depends on the size of your organization. Whether an audit is required or a compilation or a review, and I'll spend a little bit about each one. But for example, Mountaintop submits itself for a full audit on an annual basis, and we do that because we've got banks that want that information, and they want that level of assurance that the financial numbers that we present are accurate and reasonable within the environment that we're doing. We also have some grant-making organizations that require that. If audits are the most expensive form of independent oversight you can have. If you don't need to have an audit, I wouldn't spend the money on it. I mean, because you can get the same level of assurance with your donors and your organizations with a review or a compilation. Audits, they go another level deeper. Your financials have to be recorded according to certain standards that are set up by government, the AICPA, and the oversight bodies within the accounting profession. A compilation is really if you don't have the skill set necessary to put together a set of financials, then that's something an accountant can do for you and provide with you some level of assurance that the financial information presents fairly your organization. A review is a little bit deeper and another level of guidelines and rules are applied to it. The reason that your review or your compilation is going to be cheaper than your audit is the amount of time that the auditor has to spend in preparing that. We've had good relationships with our auditors over the years. You're encouraged to change your auditor every 3 or 4 years. We've not been great at that because in the middle of nowhere, getting an auditor that's willing to come and see us, because we're an hour and a half, 2 hours from Nashville and Chattanooga. The way our finance committee has justified keeping the same auditor is that they press that auditor pretty hard during conversation. But if your organization is required to have an audit, you want to go out and get one that has nonprofit experience, that understands what you're doing as a ministry, and has some understanding of how you operate, because it makes it easier for you to be able to support them through that process. I know, like the Evangelical Association for Financial Accountability, they require audits for large organizations. I like 3 or 4 million. 2 to 3 million is what they say is good for a review, and then under that for a compilation. But like I said, we're not in that category, but we do audits because of the requirements of our lenders and some of our grant making organizations. Does anybody have any questions?
Ed, how many people do you guys have on your finance committee, or what portion of your board is on the finance committee?
We have 5 finance committee members, and our total board is 12. Plus 3 trustees, so 15.
Great. I want to make sure that Jake and Susan have a chance to talk too. But does anybody else have a quick question for Ed before Jake takes his?
Yes, I have a question. I know you were saying that the finance committee would give like just a general overview to the board as far as how the ministry may be doing. Is there any specific reports they should be giving, like a profit and loss or different things of that nature, or literally it's just a hidden, just hitting the high points? What would you suggest?
We do provide a statement of financial activities, which is your income statement, profit and loss, a statement of financial position, which is your balance sheet, and a cash flow. But when we talk with the board, there is a written narrative that they get along with those documents. We only go over the written narrative with the board, but give them that detail in case they want to dig in.
Okay.
Thanks. Hopefully we'll still have a little time at the end if anyone still has questions, but I want to move on, make sure our other two panelists get their time. So I'm going to turn it over to Jake and let him talk next.
Okay, so first I wanted to talk about unrestricted versus temporarily restricted versus permanently restricted funds, because that's something that we seem to talk about every board meeting because people get confused about it. So unrestricted funds can be used for anything. They're not given for something specific. They're just money that comes into your organization that isn't for anything specifically. Temporarily restricted funds are given for a specific purpose or a specific project or a specific time period. And they can only be used for that purpose. So for example, we get a lot of money from funders for scholarships so that people can attend our program for less than our normal fees. And so when we bring in that money, that can only be used for scholarships. So we can't use it for building materials or to pay our staff or any of those other things. It can only be used for the purpose that the donor gave it to us for. And then permanently restricted funds are given for something like an endowment. So we have an endowment at SSP, and the money that was given for permanently restricted funds, those actual funds that came in can never be spent. And so we hold that money forever. And then any interest or gain on those funds we can use for other things. But the lump sum that was given to us can never be spent. We have to keep that forever. As far as tracking restricted funds, in QuickBooks, we have a separate section in our chart of accounts so that it shows up separately on a P&L. So when you run it, you can see like this money is for scholarships versus just general funds. And then it's also broken out by purpose on the balance sheet. So when you close out the year, you can see it in the equity section as a separate category. So you can see like this is for scholarships or this is for, you know, this specific grant or whatever. Does anybody have questions about restricted funds?
Well, I definitely learned something. I never knew the difference between temporary and permanent restricted. So thanks for that, Jake.
Sure.
I have a question. If you received, we received like a grant in 1 year, like in 2017, but we didn't use all of it in 2017. So we carried that over into 2018 to finish the project. What does that look like in QuickBooks? Like when we look at our budget or different, you know, reports, it kind of looks a little, you know, I don't know how is that supposed to look when you have it got it in 1 year, but you still are using it another year, basically?
Yes, so you would create an equity account that would be whatever you're carrying over from 2017 to 2018, for example. And so instead of showing up as unrestricted net income, it would be restricted net income, like it would be a separate line on your balance sheet. And then that would carry over until you spent it. So if you carried it over from 2017 to 2018, and then you spent it all in 2018, then you would kind of zero that account out at the end of 2018.
Okay, and if we don't use it all, do we do the process again for the next year?
Yeah, you would just adjust down the balance. So the amount that you did spend in 2018, saying, you know, you carried over, say, $10,000 from 2017 to 2018, and you spent 5,000 of that in 2018, you would adjust the balance down by 5,000 so that your balance sheet would only show you're carrying 5,000 forward to 2019.
Okay, thank you.
Sure. I also wanted to talk about budgeting a little bit. So we do our initial budget in Excel, and we start with the previous year's actuals, and we kind of break it out by program. So each program has its own tab in an Excel spreadsheet. We look at what we spent the previous year, and then kind of go through each line item and go, you know, are we going to spend more or less or about the same for each category, and then adjust it accordingly. With tracking our budget to actuals, we run a budget to actual report every month, and we talk about it as a staff, and we also send it to our finance committee of our board, so we can see where we're at with our actuals in relation to our budget. And then we do a big budget update at the mid-year point, and we do that because a lot of our both income and expenses are related to participants. And so if we have more participants than we planned for or less participants than we planned for, then that dramatically affects our budget. And so our mid-year point is at the end of March. And so by that point, we really have a better idea of where we're going to be with summer participation. And so we do a big budget update at that point, and really look at, okay, how much have we spent in each category versus how much we budgeted? Did we budget enough? Did we budget too much? And kind of revise the entire budget at that point. And then I also wanted to talk about site expense tracking. So we have 5 sites in the summer, and they work, the staff works for 9.5 weeks, and they're all pretty remote. And so, you know, each of our staff, our office staff, can go visit a site, you know, 1 or 2 times during the summer, but they're mostly on their own. And so we also have a separate account, a checking account that all of our summer staff have debit cards connected to. And then basically they're given a budget at the beginning of the year, and they manage their own budgets with a lot of oversight. Each week they enter their receipts into a program we have called Site Manager. They enter line by line what items they're buying. And then their supervisors in our office look at their purchases and can give them tips on, like, oh, you're spending too much on milk, like you should go buy it at this other store. Or you're buying the wrong kind of lumber, you should buy this other kind of lumber. So it both gives them advice on where they should buy things, but also quality of things, and figuring out how we can make the projects better and use their budgets to the, you know, most effective use of their budgets. And then I enter the receipts into QuickBooks and kind of reconcile it each week as they wrap up their week. So I can see, okay, like you missed entering these 5 receipts that have hit the bank. Then I kind of give each staff, okay, this is what you're missing. And then they follow up, we follow up on it. So that's kind of our process for tracking the site expenses. The staffs also do assign materials to projects. And so it's not as much for an accounting thing. It's more for a project tracking and budgeting project-wise. But as they buy materials, they'll say, you know, I used 8 of these 2x4s on this ramp. And so we can use those actuals from previous years to help figure out, okay, if we're going to build a similar ramp next year, it's going to cost us approximately this much. And we can also use that for reporting for donors or for whoever else wants to know specifics of the project by project costs. So that's kind of how we do it.
Great. Does anybody have any questions for Jake on anything he shared? Thanks for asking that question, Nicole. I had the same question and didn't even know it. So now I know what to do at the end of this year with some scholarship funds that need to be carried over to next year. So thank you for asking and Jake for answering.
I have a question for Jake, if that's okay.
Yeah.
Do you actually segregate your restricted and unrestricted funds in separate accounts, bank accounts? Or
no. Our permanently restricted funds are in a separate account. We have a account at the there's a regional community foundation that we invest in. So our permanently restricted fund, our endowment is there, but everything else is within our regular bank accounts. We have 2 checking accounts and a savings account.
Thanks.
Mm-hmm.
All right. Thanks, Jake. And I'm going to turn it over to Susan now.
Hi, I'm Susan Miller with Appalachia Service Project in Johnson City, Tennessee. We are a large organization. We operated an $11.5 million budget last year. We had almost 13,000 summer volunteers and 142 summer staffers who come into our Jonesville, Virginia training center for 2 weeks before we send them out throughout central Appalachia into North Carolina, Tennessee, Kentucky, Virginia, and West Virginia, all along the ridge line of the central Appalachian Mountains. It's a crazy and wild business model, but it's wonderful what they do and what they accomplish. Some of the best practices that Ed discussed, I'd like to touch on a little bit of things that we do. You know, as I said, given our size, we do have an audit. We do have a lot of mid and major level donors who are very comfortable because we have an audit. They feel very comfortable in donating their funds to someone who has a clean audit every year, and I highly recommend it for larger organizations, but I agree with that as well, that, you know, if you don't have to and you're smaller, then, you know, there are other methods to get the independent oversight that you need. Some of the things that we do in terms of internal controls, we do have 2 people opening the mail every day, and we actually get cash donations in the mail as well as checks. So we have 2 people, which is something our auditors suggested. They open the mail together, they deliver the monies together to our advancement department. We have 4 people in accounting, and we have the division of responsibilities so that the person that writes checks doesn't reconcile the bank accounts, and no one in accounting has any kind of check signing authority. The person that reconciles the bank doesn't write checks or do ACH payments. The people that do ACH payments don't reconcile those bank accounts. So it's, you know, it's a good distribution of making sure that you have the internal controls in place to prevent any potential for fraud or any potential for temptation or questioning of your procedures. We do have 42 bank accounts. The way we operate our summer centers, back in the day, we used to set up a small community bank in every community we were in. We had very little control. We had no ability to have online banking. Some of our places are extremely remote. Our Hancock County, Tennessee center didn't have Wi-Fi until this summer. So it's it's challenging. But what we have done in recent years is through our banker, who is also a member of our board and our finance committee now, we have set up all 42 bank accounts in one bank. At our training, when we train the summer staffers, we have 4 staffers at every center. We have a center director, a finance coordinator, a volunteer coordinator, and an operations coordinator. The finance coordinators have very specific training that we attend and supervise. We train them to use online banking. We give them view-only rights of only their county's summer center. They are then required every day to get on their online banking and to get on their Finance Accelerator online spreadsheet, which we can also get on in full Excel in the office. They enter daily any expenses that they've made. We've given them all the basic columns that they need for food for groups and housing of volunteers and supplies and materials and permits and fees, etc. All the basic things we know that they're going to use all the time. And then they have an other column. We use Great Plains accounting software, and we have set up a system where we can actually, once we in accounting have checked that they've matched everything to the bank, they haven't missed any receipts, and we're satisfied with the way they've entered everything on their spreadsheet, we use an integration tool that we run through Smart Connect, and then we are able to actually post all of their sheets weekly directly into Great Plains, which prevents a lot of duplicate entry, prevents a lot of the necessity of, them having to enter it and then us having to re-enter it, because with 26 centers, it was just becoming overwhelming. And so the 4 of us in accounting every summer split up. We all get 6 or 7 or 8 counties that we add to our regular duties, and it's a pretty wild time for 7 or 8 weeks. And then we sort it all out in August and start reconciling all those bank accounts. The other thing that I wanted to, does anybody have any questions about that so far? Okay. The other thing I wanted to talk about a little bit is grants. Up until the summer of 2012, when there was a huge flood in the Dry Creek area of our home county, we were pretty much in the home repair business and in the summer business. We also have 3 year-round centers that we operate, one in Kentucky, one in Virginia, and one in West Virginia. But, they have adult groups, they have spring break groups, fall break groups, Christmas service groups, things of that nature. But other than that, we were really in the home repair business. But beginning with the flood of 2012, we were asked by the state of Tennessee to take on new home reconstruction, and we built 28 homes over about 2 years using volunteer labor and using all of our basic concepts of how we do things. But at that time, since then, we have gone into Greenbrier County, West Virginia. Since the flood of 2016, we've built over 60 homes there. We've gotten a Tennessee Housing Development Authority grant for $500,000 to start rebuilding homes in Hancock County, Tennessee, which is the poorest state in the state of Tennessee, poorest county in the state of Tennessee. So because of all of these new terms and twists that we've taken, we have started using a lot more grant funding sources. And We have grants from the Appalachian Regional Commission, from the Federal Home Loan Bank of Cincinnati, and we've now applied to the Pittsburgh FHLB for help in West Virginia. The THDA, we have some pass-through HUD money coming in, we hope, soon from, it's passed through the state of West Virginia. It's called the RISE program to continue to help with the rebuilding from the flood of 2016. Now that a lot of the donations have slowed down, you know, because it's old news, you know, that the flood was 2 years ago, but there's still a lot of people without homes. So because of this, we have had to learn a great deal about grant compliance, grant administration, pre-approval processes, disbursement requests. And my advice to you as you move more into the world of grants is to learn everything you can. Know what you're getting yourself into before you apply for grants. Know if it's unrestricted or if it's temporarily restricted. Know what personnel requirements you might have to add in order to be able to meet the requirements. We have some Federal Home Loan Bank grants. The pre-approval process is probably about a 20-page process with restrictive covenants and income information on the homeowners and everything. Then the disbursement requirements include having certificate of occupancy, having inspections, having an energy efficiency rating, having clean deeds. We've had to untangle a lot of the messiest deeds you've ever seen that go back about 4 generations where, you know, Mama just passed it on down. So the paperwork can be very overwhelming. When you start understanding your compliance requirements, I would recommend that you go to every training that an organization offers, get to know their personnel, build relationships with them. We've been dealing with the Federal Home Loan Bank of Cincinnati for about 4.5 years now, maybe longer, 5. And I can tell you that it has been a process of getting to know their people, getting to know the right people, getting to know what they expect. If they send you an email that says, we strongly recommend that you attend one of our training seminars in Nashville or Cincinnati or Lexington, they mean you need to go. and it's very, very helpful to build those relationships. Does anybody have any questions about the grant process?
How do you track things like expenses separated out in your accounting software? Do you have like a separate class for them, or how do you?
Well, that was perfect timing, Jake, because I'm now going to bring in Christy Young, who actually does all that work. We found that Great Plains was not very conducive to nonprofit software accounting. Is great for a lot of things, but it's not great for running a construction business. So we went with QuickBooks Construction, Contractor Edition. And we have set it up because so many of these grants require so many specific things. And I'm going to let her screen share and explain a little bit to you about how we do that tracking.
Great. Thanks, Susan.
Thank you. Okay, here we go. So, do you want to sit here?
Well, we'll need to drop them out.
Yeah, you sit down. Okay, it's
Then we'll
okay.
switch back.
Yeah, it's all very.
Hi.
Hi, thanks for joining us for this last little bit of our webinar. We're looking forward to
Thanks for having me. Hold on one second.
Okay.
These are what he said. I think this is it. Yes, we want to share this.
Mm-hmm.
Oh, can you all see
Oh, I can't see it. There you go. Okay. Hi.
That's
You
it.
hid the ribbon. Okay, can you all see just like a basic screenshot?
Yep.
This says vendor information.
Mm-hmm.
Okay, these are just some quick screenshots that I took. All of the invoices that come through that are for specific homes that we're tracking for grants, they are entered in our Great Plains software, but as a general transaction, but not detailed. And the detailed part we put in QuickBooks, and we can track it down to the sub account. So this is just an example of a vendor record, and it shows different bills that have been processed through there. And then this is the interior of a particular bill that is broken down into our different classifications. Like under wood, we have wood framing and deck framing and trim. And so we code it down to a pretty detailed level. And our construction supervisor or director of new build, codes these invoices. And then, but in QuickBooks, we can, for example, this was a big statement, and we can break it down by the house. There were 3 homes involved in this particular bill. So it's not only broken down by category, but it's assigned specifically to that house. And that's just a code name that we gave that particular house. This is just an example here of just a portion of our chart of accounts, and it loosely follows the international construction codes. There's like the 1000s are general conditions, 3000s are concrete, and it goes on up through 16,000s are electrical. So that can be as detailed as you want it to be. So when I'm ready to do a disbursement request on a FHLB affordable home program grant, I can run a report from QuickBooks. You can run all kinds of different reports, but just a simple profit and loss by job will show the amounts in each of these categories. And the FHLB does want to see this detail for our on our sources, cash sources and uses summary on the disbursement request. So it's very easy to pull a report for the whole entire job. And then QuickBooks will let you export that information to Excel. This is the way we do it anyway. And it puts all this information into Excel. Then we have a template that is specifically for the Federal Home Loan Bank that we can copy these numbers right into this template once we plug in some basic information. So it gives them a form that shows all of our costs on this home. And then it also calculates, we will plug in our other funding sources and different things we need to report, and it will calculate totals of certain categories, and we sign it, and it also produces like a recap of the whole job. Like where this would be the detail of it, this is the summary of it. So we submit all of that with our disbursement request, and they're very satisfied with that. And that's just in a nutshell sort of how we do it.
Great. Thanks, Christy.
All right, you're welcome. Thank you.
Does anybody have questions before Christy goes?
Yeah, okay.
How do I make this go away?
Just close it.
Close it.
Let's see, I think, Susan, if you go to the bottom, yeah, there you go. You got it.
Okay.
Well, I think for me, the main takeaway is just that this level of reporting is possible, and it's good to know how to do it and what to do it through. And maybe if anybody has specific questions about that, they can be in touch with you later. We only have about 5 minutes left. Gosh, the hour goes quick. Does anybody have any questions on any of these topics for any of our panelists?
I have another question. Something that came to my mind, and it doesn't matter who asked, but I wanted who answers the question. But I wanted to know, when it comes to like year-end donations that you may get for your organization, when do you cut off? Because sometimes people will send it and you may not get it until several days into the new year. When do you cut off and still count it for the year past, for the year that they actually sent it for? What would you suggest in doing that?
So we, if it's a check, and it's dated in the previous year, then we will put it in the previous year. Okay. Also, if it's like we just closed out our fiscal year and we have some pledges from major donors that we haven't actually received yet. Mm-hmm. If it's a pledge, then you put it in the year that people pledged it in. And so we just put that in accounts receivable until we actually get it, so that it puts it in that fiscal year. But then when you receive it, you just take it out of accounts receivable because you've received it. So we kind of do it, if it's a check, then it's based off of the date that is on the check. And then if it's a pledge, we put it in the year that it was pledged in. But like online donations and things like that, it's just the date that they made it on.
It may not be as critical this year because of the changing rules as it relates to what's deductible and what's not, but the IRS is pretty specific. It has to be postmarked in the, like if you're recording gifts for the purposes of documenting them for the IRS, it has to be postmarked in the year or received physically in the year that you're recording it. And I think what you were talking about, Jake, is from an accounting perspective, that's a little different. But if you're using it as it relates to donor gifts, so that it shows up on their annual contribution summary, it has to be either postmarked or physically received, or the credit card processed in the year in which they're seeking the deduction.
Yeah, the calendar year we do it based off the postmark, but for the fiscal year we do it based off of the check date.
Okay, that clarifies it. Thank you so much for that information.
Got 2 more minutes. Anybody else have a question they want to ask? Okay, well, I have a little bit of housekeeping at the end here. You'll see in the chat box a link to a really short survey. I think it's 3 questions. If you don't mind taking that, if you don't have time to do it right now, I will also send that link in an email probably tomorrow. I also wanted to mention our next webinar. We have another webinar this month. It's on October 30th from 1:30 to 2:30, and it's called Helping to Mitigate Risk, Volunteer Background Screening Insights and Best Practices. And that webinar is going to be led by Verified Volunteers, which is one of our partner organizations. They provide discounted background checks for volunteers and employees of ReFrame members. So if you're interested in that, you can register through our website. It's free for members and very low cost for everybody else. Thank you all again for joining us today. I'll share this recording with you all in case you need to revisit it, and also it'll go to a few folks who registered but weren't able to attend. And a big special thank you to our panelists. Thank you, Ed, Jake, and Susan, for sharing your insights and knowledge. And I know I learned some things. I'm sure everyone else did as well. So thank you.
Thank you.
All right, everybody. Enjoy the rest of your day, and I hope to see most of you at ReFrame conference next month in early November. And if not, perhaps on another webinar. All right, take care, everybody. Bye.
Bye.